Hey, what's up guys? John here. Are we going to see a soft landing and completely avert this housing crash? Or are we going to see a housing crash to levels in which we've never seen before? Now, if we go back in history, we look. In 2007, they said a soft landing is expected and that the Fed chairman projects soft landing for U.S. economy, right? 2000, they said, this is dot-com bubble, soft landing in sight for economy, rate cut next. Sound familiar, right? So the same thing in 1980, same exact thing in 1989, same thing again 1978, and the same exact thing in 1973. So over the last 50 years, right before every single recession, we've seen the same headline, soft landing in sight. Soft landing is coming. We're hearing the same exact thing now, but many people think that this time is different. You have Barbara Corcoran, you have Dave Ramsey, you have a lot of media personalities coming out saying this is the time to buy a home, refinance when rates drop. Home values are going to continue to climb. I kind of push back on that because I look at what's going on behind the scenes and I wonder, how is this really sustainable? How can this last? I believe we're stepping into a really, really big problem. But I'm the first one to tell you as well that I'm completely shocked that home values are holding up as high as they are, given the fact that mortgage rates have tripled in the last 18 months. We're in a very, very crazy economy, very crazy housing market, but I don't think it's going to last. And I'm going to break it down for you in this video. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's really going on. And if you want to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you want to invest in what I believe is going to be the greatest wealth transfer of all time, you're going to need good credit. We'd love to help get you there at greatcreditfast.com. Take a look at this. So you look at stats. The Fed is moving historically fast to tame inflation. You look at the red line, that's 2022's hike. So we've been hiking more and more and more. Look at 1983, 1988, 94, 99, 2004, 2015. We're hiking faster than we've ever hiked. And we have more debt than we've ever had. Right now, you need roughly $140,000 per year to afford a $500,000 house. This is based on having zero debt. Now, Americans have debt. They have credit card debt, student loan debt, they have auto loan debt, they have debt. They're coming into this with debt. But this came out in May. Now, when we look at what's happening, it's shocking. Barbara Corcoran says that housing prices are going to go through the roof. And she makes a statement and says that what she thinks is very likely going to happen, and it could happen, is that we are going to see the Fed pivot. And when the Fed pivots, we are going to see home prices skyrocket. And then at that point, you can refinance and get a better loan. But my concern in that is that if the Fed does not pivot, if it does not go exactly how she sees it, then a lot of people could go upside down on their properties. A lot of people could overpay for their properties. A lot of people could become house poor, and a lot of people could lose everything. It's a big, big gamble to put all your eggs in one basket, which is the Fed's basket, and say, you know what, this is what I think they're going to do in the short term. And then if they don't do that, it's game over. Dave Ramsey is saying very similar things. It's a great time to buy a house. I don't know about all that. Let's look at the numbers and let's come up to this together. So they say the median home price right now is $436,000, $436,800. So if you have $169,000 a year in annual income, $169,000 a year, you have monthly debts of $1,649. Now, how did I come up with that? Well, let's look at this. Right now, average student loan debt $503 a month, average credit card bill $430 a month. Average car payment, $716 a month. So simply pulled it right here. I just added this up and came out to $1,649. So that's how I came up with $1,649 as a fixed debt. Now you're putting $50,000 down on this example with a mortgage rate of 7.5%. Now if you have perfect credit, 800 credit score and above, you're going to get probably somewhere in the low sevens, maybe 7%, 6.99%. But if you have slightly below the average credit score in America, 660, 680, you're looking in the mid eights, right? Or lower eights. So 7.5 is a very conservative number. Based on that, your monthly payment will be $3,400, $3,410, not including utilities, upkeep, any of that. That's a big number. And that's the median home price in America is $439,800. So, or $436,800 right here, $436,800. So that's what you would need to make for that house. That's shocking. Now let's look at this. So when we look at what interest rates are, just for perfect credit, just so you can see, 7% for 800 credit, and if you're 640, you're in the mid eights, right? So that's where you are. That's where you are if you have average credit score in America is a 698, so 8%. So let's look at this. So 40% of all U.S. mortgages, 40% of all U.S. mortgages were taken out between 2020 and 2021, that 24-month period. The average down payment, 6%. 6%. Some people say it's 10%. Some people say it's 12%. Give or take, let's say it's 10%. Let's go high end. The cost to sell a property is 8%. You have 6% going to realtors, transfer tax, you have closing costs, you have fees. You're looking at 8%, 9%. So if you look at this number, a lot of people are buying these properties with record low mortgage rates. The conversation is that you can refinance these properties later. The only way you can refinance these properties is if you have equity. Meaning, if it's a $400,000 property, you're going to need 20% equity at a minimum for a bank to give you a loan. Meaning, if you owe anything over $320,000, you're not going to be able to get a loan. And so if most people are putting 10% down and they owe 350, 360 on their house, what does this mean? It means they can't refinance. The only way in which they'd be able to refinance is bringing money to the table, or if the value of their home skyrockets. So it's a huge gamble. It's a massive, massive gamble. It's a gamble I wouldn't advise on. I think it's a very, very problematic situation. Right now, mortgage rates rise for the third week. A lot of people are saying that mortgage rates, are going to remain high for a short period of time. It's going to pivot. But look at this. Mortgage rate applications, this was just a couple months ago, at a 28-year low. Like, this is the type of market we're in. Everything is just so crazy. You don't know how this is going to play out. Fed chair sees a long way to go for inflation fight. Then you have right here, the home foreclosures jumped 13% in the first half of 2023, highest level since before the pandemic. Then jaw-dropping stats about the state of American debt. If you look at where American consumers are, 33% of Americans believe it will take more than 2 years to pay off their credit card debt. 15% of Americans have been in credit card debt for 15 years. Nearly half of Americans need credit cards to cover essential living expenses. 45% of Americans have taken out more credit card debt during the pandemic. Most Americans have missed at least one credit card payment, and 44% of Americans would use credit cards to cover a $2,000 emergency. And car repos are exploding. U.S. corporate bankruptcies are at the highest level since 2010. You had 3 bank failures that just happened, and you have an economy that just added $1 trillion in debt in the last 35 days. So this economy is just adding more and more and more debt. Consumers are in a worse position they've ever been in. Mortgage rates are at all-time highs. Home prices are at all-time highs. I don't think it's sustainable. I think that there's a higher likelihood of a massive downside than continued upside. That's just what I see. If you are going to invest in real estate, make sure you're going to make a smart investment. Buy a value add deal, something in which you can buy it for 50 cents, 60 cents, 70 cents on the dollar. You can add some value. You can build a margin of safety in on your deal. But the last thing you want to do, in my opinion, is run out there and overpay for a piece of property and not have any way to pivot, move, or do anything down the road. You don't want to be house poor right now. You want to have cash. You want to have credit. You want to be able to take advantage of opportunities, because I'm looking at everything and I'm seeing opportunities in the very, very near future for those with cash and a game plan. What do you think? You think this is sustainable? You think Barbara Corcoran, she's a very smart lady. Do you think Barbara Corcoran's right here saying that, it's a great time to invest, that home prices are going to go through the roof? How much more can they go up, right? Really, how much more can they go up? If you have household wages falling, most people are house poor, property taxes, insurance, and utilities are continuing to climb, the cost to repair your property is continuing to climb, and the cost to rent is falling, what's ultimately going to happen? You're going to see more and more and more incentive to rent. That's what you're going to start to see. So how can home prices climb if people don't have the ability to pay more money, right? What I think is going to happen is I see $5 trillion on the sidelines right now, currently being held by private equity firms, Wall Street investors, large firms sitting on all this cash for a reason. Blackstone, they founded Invitation Homes, 2008, 2009, bought almost 80,000 houses in the great financial crisis. They just raised the biggest real estate fund in the history of the world for $30 billion, $400 million. Why? To run out there and go buy properties at the height of the market because the market's going to continue to boom? No, I think their analysts are looking at where the everyday consumer is right now in America. I think a lot of very smart individuals are looking at where the everyday American really sits in terms of income to debt ratio. And they're saying, you know what? People are going to be in a situation soon. It makes sense to hold cash. That's what I think. I'm curious as to what you think. Do you think that we're going to start to see a dynamic where people are going to be forced to sell? I mean, you look at this, the entire housing market is to their teeth in debt. That's just the truth. They took out home mortgages at 2.5%, 3%, 4%, which is a great mortgage, no doubt about it. But in 2020, 2021, where people, they can't get out from underneath these properties. They can't refinance their properties. I mean, they're in a very, very delicate situation. But what do you think about it? Drop below, hit the like button, add me on IG. I'm really curious as to what do you think about the housing market. It's really kind of a shocking situation, a really shocking dynamic that housing prices have remained this elevated given the fact that interest rates went from 2.875% to 7.85%. Like, it's absolutely crazy. What do you think? Drop below. And if you need help fixing your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. I'll catch you guys in the next video.